Welcome to another episode of the Profitable Home Services Podcast, where we're going to dig deep into the profit and the cash flow leaks in your business. We're so glad you could join us. And our guest today is Ellen Rohr. I'm so excited to have her on the program. Ellen is the plumber's wife, but she's also president of Zoom Drain Franchise. So she's not just a plumber's wife, but she says that she nearly sank her husband's plumbing company. It seemed like lots of money was moving through the company, but at the end of the month, there was never any money left. And I'm sure none of the listeners have ever had that happen to them. Ha ha. With the help of great mentors, Ellen figured out how to fix and grow successful businesses. She teaches business planning and financial literacy. She helps contractors make businesses simpler and more profitable. Now she's the owner and president of Zoom Drain Franchise, LLC, which has a new franchise concept with 20 locations across the country. She's the author of 4 unfussy business books, Where Did My Money Go? How Much Should I Charge? The Bare Bones Biz Plan, and the Weekend Biz Plan. She also hosts a regular podcast, Behind the Wall, for phcppros.com and Unclogged, which is a Zoom Drain podcast. Ellen, welcome to the program.
Hey, I got to update my bio. I just realized one is we have 50 locations now at Zoom.
Wow.
I know it's been a rockin' wild year, and I admire you for doing podcasts. I heard something. Let me just open with this today. We were talking about discipline and getting yourself on camera, and it's risky to put yourself out there with a podcast, right? And it takes time. It's easy to blow some of these things off. But I heard Jessie, who's married to Sarah Blakely, who does the Spanx. Do you know who she is? Billionaire, self-made. She's amazing.
Yeah. Mm-hmm.
I follow her on Instagram. Anyway, Jessie, her husband, started Marquis Jet. He's another billionaire. So it's like the darling billionaire couple. But he said that most people give up too soon. He said, if you want to be a successful podcaster, there are 2 million podcasts on Spotify. 25% of them, 500,000 of them, only did 1 podcast episode. So by doing 2, you put yourself in the top 75, right? And then he had another statistic, and I'm going to mangle it somehow, but like if you did 20 podcasts, you're in rarefied air at Spotify because so many people quit too soon. And I think that's kind of the energy I'm coming to the table with today, Diane, is that we want to grow these businesses, and there's going to be some scary moments, and it's going to get hard. But if you will hang in there, the hard part is the good stuff. That's where the stories are. That's where the songs are written, all of that. And I feel like you and I are already kindred spirits.
I have a little picture that hangs beside my desk, kind of off camera, that says, I can do hard things. Because
Glennon Doyle. Yeah. I love her.
Yeah. Starting this podcast was definitely so far outside of my comfort zone. It was in another galaxy. And I've been having so much fun talking to people like you.
What made you break through the fear? Because it's easy to just say, well, no, I'm not, I'm kind of introverted, or that's not my jam. What made you press through that?
I felt like if I was going to be an industry leader in the home service industry, I had to become visible. I couldn't become the world's best kept secret. I had to become visible, just like you've become visible. Yes, I've written lots of books, but the only people that know about my books is somebody who's landed on my website, or maybe found them on Amazon, or my family, or my clients. That's about it. So you've got to become more visible, and I've got to stop hiding behind the camera.
Well, you are absolutely beautiful, and I'm so excited to have you. And I love your story already. So we were just chatting it up before we started. We pushed record, got to push record because we were sharing all this great stuff. So one of the things that you said is that you're a recovering accountant. And so what was it that made you break out? I bring this up. Let me give a little background on that. Because when I first was figuring out my asset from my elbow, I'm working with my husband, the plumber. I quit my real job. Now I'm not making any money. Super resentful about that. And, thinking I'm a smart chick. I should be able to count the money. He's turning wrenches. Why aren't we getting rich? We're fighting all the time. Like every horrible thing about a mom pop shop, I definitely experienced. But at the time I had an accountant, and I remember thinking, well, I can't pay you, so I guess I'll have to cut that expense. And she's going, no, listen, you could learn how to do this and I could help you. We could do this together. And she really dragged me through. I had met a guy who said, you need to figure out how to read a balance sheet and a profit and loss. And I'm like, well, how do you do that? And my accountant, her name was Brenda, her husband, Steve, they lived in a teepee 100 years ago. She was so kind to me. She said, just sit next to me. I'll take you line by line. I'll show you what this means. And I need some help from you to make sure that it's right. And she dragged me through my financials. I'm crying talking about it. And if I hadn't had her, later on, I dealt with so much accountant abuse and neglect, and the martyr, the intimidator, the person who never returned your phone calls. Like with clients of mine and other businesses I'd been in, there were so many bad accountants. I just lucked out that from the get-go, I had Brenda. And without her, just some encouragement to you, Diane, she changed my life, because she's the one who just kept I feel her like grabbing me by the elbow, sit yourself down and let's go through this. Take a ruler, line by line. What are we talking about here? So, right. That was so extraordinary and wonderful to have someone support me at my most vulnerable. So what made you break away from just filling out tax returns and asking people for their checking account statements?
Well, I know that the compliance side of accounting is needed. It's important, but there's thousands and thousands of accountants out there who can file a tax return, who can file your sales tax return, who can file your workers' comp report. They can do that stuff. But there's very few accountants who can come and talk to you entrepreneur to entrepreneur, to be that coach, to be that hand holder, to be that person that says, it's okay, ask the question and let me see if I can help you with an answer. There's very few accountants that'll take that track. So then I've created a coaching program around helping them understand their numbers. And then, as you can see from the books behind me, I'm a profit first nerd. So then helping them find those profit leaks and then start working to close those profit leaks and become more profitable, which now takes the stress off, because in your case, you would be able to take home a paycheck and now you got value again where you didn't before. And you're no longer fighting over how the money's getting spent. Instead, we have a plan. We're working our plan. And I'm seeing success in these home service businesses. And it's like, this is what I was meant to do, not sit there and file the forms. Not that I don't still do that for just a handful of my clients, but not like I was doing in the earlier days. Now I do it because I want to give this client a full service, including the coaching, and not just because I need to make payroll. So I'll do this other work just because I got to make payroll. Those days are gone. And now it's intentional. We're working the plan.
Look at you. You're like on purpose. You just have a great energy about you. How about that?
Well, see, this is where great minds think alike. We found you, and instantly you and I had a connection out there.
Well, I'm just so excited. I've got a handful of great accountants and bookkeepers in my life, and I'm so grateful for them. And it's always fun to find one. So thanks, Diane. So one of the passages that I went through on this journey to becoming good at business was I met this guy named Frank Blau. I always like bragging on, Brenda was this great accountant who helped me through like that really sticky time of figuring out what's a balance sheet, what's a profit and loss, what are debits and credits, how do you do this? And then once I learned that, I was kind of like born again. How do I not know this? I went to college. I have been in business. I just couldn't believe that I didn't, of all people, didn't know it. And I started to look around. Nobody knows it. It was like Emperor's new clothes, right? Nobody knows this. I got to preach. So I set out preaching. But on this journey, one of my great mentors, Frank Blau, he's the one who taught me about pricing. So I always like talking about pricing, because back in the day, I'm going back 40 years now, back in the day, everybody in the trades charged time and material, and they raced to the bottom. If somebody could do it for 40, somebody else would do it for 38, somebody else would do it for 37. Then you had the stopwatch on, and it was this, it was a terrible way to live, but it was what everybody did. So this mentor said to me, well, first off, you could change the way you structure your pricing. And instead of charging by the hour, you could charge by the job. Nowadays, that it's so ingrained in our culture. Kids today don't even realize this was a thing, but it was when I was first, getting my legs under me. The important part of this was, he said, if it could be done for $50 an hour, $70, $150, $250 an hour, I would charge time and material. But you know what? It doesn't add up. When you add up all your costs of doing business, and then you divide it by the possible billable hours you could have out there, your break even per hour is a lot higher than whatever going rate was happening in my neighborhood, as well as many, many others. So back in the day, we were one of the first people to charge flat rate or menu pricing. And that really is what broke it through for me. The modern message on that topic is, you're probably going to be the most expensive guy in your marketplace if you want to make any money doing this. I see you shaking your head. How is this conversation striking you?
I love this conversation because that's one of the areas we like to get into in the program, is how are they structuring their pricing, and when was the last time they updated their price book? During COVID, they were having to update it every 30 to 60 days because prices were moving so quickly. And I had several people say, well, I normally do it every once or twice a year. And it's like, guys, you're leaking profits when you do that. You've got to stay up on this, but it's a big time deal. And I'm so busy. It's like, but you can't afford not to. Don't give me those excuses. We've got to stay up on your costs. And by the way, do you know what it costs you for every hour that your employees are out there? Do you know what their fully burdened labor cost is? And they get like, no. And so we dig into that area, and then they come out of there going, okay, I now have to raise my prices.
Now I have to raise my prices. And a benefit of that too, when my husband's name's Hot Rod the plumber. So there, when Hot Rod and I were first figuring this out, when I would say to Hot Rod, we just don't have enough money, he would hear, I'm not good enough. I'm not working hard enough. And you can see that, tensions would rise, and it was really stressful. But when we started to use the balance sheet and the profit and loss, and sales minus expenses is a negative number, so that number has to get bigger. Well, what's the easiest way to do it? To increase our selling price. The costs stay the same, and the selling price goes up, it drops to the bottom, and you can get yourself to break even. I mean, this was just, again, like this mind blow to me. And now, over the years, go ahead, add to that.
Without working more hours.
Without working more hours. And even if somebody says, I don't want to use you again, you might have, as my friend Al Levy says, less stress and more success. Like maybe you could get a life back too. So as we were putting the pieces together with this, I started to, preach to my fellow plumbing contractors and electrical contractors and HVAC guys. And I would say, hey, we could raise our prices, all boats rise. Now, this is technically, it's price fixing when you have these conversations, just saying. But I couldn't help myself. I was like, add up your cost of doing business. You'll find what I found. We're not charging enough overall. And to my face, they would say, good idea. We need to make more money. But behind my back, they'd call me a gouger. They would denigrate the people who were being successful. And do you ever run across that? I see some recognition in your eyes right now.
Yeah.
And, there's some friends of mine who, 10, 20, 30 years after I met them, have sold their companies now for major life-changing money. And they live in an environment where they are criticized by their, how do you sleep at night? Tommy Mello, another great guest to have on your show. Tommy Mello says, someone said, how do you sleep at night charging those prices? And he says, how do you sleep at night knowing that you're not providing the best benefits for your guys, the nicest trucks, the best tools, 401k, PTO, all those good things that employers should do? How do you sleep at night without providing that? And the customer has to pay for all of it. So part of this one of the things that Frank Blau said to me once upon a time is the problem in the trades is a self-esteem problem.
It is.
That people don't think they're worth it. My daddy wasn't worth it. He didn't charge enough. We don't want to rip people off. I don't want to, blah, blah, blah. And so in the end, you or your wife who doesn't get paid, or your spouse or your partner, or your son or your daughter, and then the great people who work with you should be able to make a really great living doing what you're doing.
Right.
So all of this added up once upon a time. I would have, I wouldn't be where I am if I didn't have the love and care of a really good bookkeeper / CPA who helped me figure some of these things out early on. So of course I was going to be on your show today.
I think,
so-
Ellen, that so many of I'm going to use the word guys, but I know there's gals out there too, in
True.
the trades right now. They came up through the ranks. They're good at what they do, whether they're a plumber, an electrician, an HVAC, a roofer, a landscaper, it doesn't matter. They're good at their trade, but nobody taught them how to run a business.
Mhm.
And then they start seeing themselves in correlation to, quote, other successful business people. And they think, but I don't have that college degree, or I don't have experience in this area, or some of those things. And so I think that comes back to that self-esteem and some mindset that I'm not
Yeah.
good enough. I don't know enough, but in reality, they do. They're amazing people.
There's nothing about the financials that's more complicated than what you do as an HVAC tech or a plumber. In fact, there's even some parallels. In plumbing, there's vents and drains. There's in the universe, what comes around goes around. There, for every action, there's an equal and opposite reaction. That's what debits and credits are. Like for every action, there's a reaction. There's a balance to this whole thing. There's a technology behind accounting that is as beautiful as plumbing. In fact, the same mindset could grasp it. I'm just trying to give you some, dear listener, I'm trying to give you a reason to believe here, but it's not that hard. And a lot of times these barriers to success come down to, just because you're bad at it now doesn't mean you can't get better. Like if you wanted to play golf, you could go golfing once and then say, well, I am terrible at this and I'm never going to do that again. Or you could allow yourself to be bad at first. My partner, Steve, says, be kind of terrible at something till you get kind of better at it. Like you're just going to get better. You're going to have people smarter than you sit, grab you by the elbow, sit you down. You're going to follow the podcast. You're going to read the book. You're going to open up your financials. You're just going to do it. If you wanted to golf, you'd go golfing. You'd listen to a golfing podcast. You'd talk to people about golf. You'd take a lesson or two. You'd go golfing and practice. You'd get some better questions. You'd come back to your coaches and you would get better. It's a course of study. So business is a course of study. You get better at it. You're not naturally good at any of these things. Maybe you had an affinity for putting pipes together and your dad, or you worked with your dad and you could enjoy that from an early age. Kids are much more open to making mistakes and cutting their fingers than they are when you get older. Heavens.
Well, and I'm going to say, as an accountant who went to college, there was nothing in my college education prepared me for running a business. Nothing.
Me neither.
So
I loved it. I was great at school, but the same thing.
Yeah.
Crazy. It was funny too. I didn't realize when I was in accounting, they'd give you these accounting questions and figure out, what cash flow issues are going on with the set of financials, and you do the problem. But it was always assumed that those financials were correct. How often, Diane, when you get a set of books, are they right? Or are they usually a hot mess?
they're usually about 50% of the time, they're a hot mess. And we have to back up from where we wanted to start, go back and do some cleanup. And now we can take off and roll and actually work with those numbers.
Yes. So it takes a little cleanup, but it didn't dawn on me. I didn't know how to fix the books. So that was my journey too. So while I'm not an accountant, I did develop good skills for being the business owner. And one of the things I share with my franchisees on the daily, and you'll appreciate, is you really need a great relationship with your bookkeeper, your CPA. The bookkeeper is anyone who's entering data. That might be you, it might be the person who answers the phone, certainly the techs play a role, and there may be someone on staff or outsourced who helps you with the actual data entry. And then your CPA is going to do tax strategy with you. And if they're good, business planning and financial planning, and that would be such a bonus. So I'm delighted that you have those services available. But that job of being the owner, you know what? If the owner doesn't pay their payroll taxes, even if it's your mistake, Diane, they're the one who goes to the pokey. They're the one who goes to the pokey. So like what you can't relinquish as a business owner is the stewardship. It's your money. I bet, you know, one of the things we say at Zoom Train is, I don't like it when I care more about your money than you do, because it's not even my money and I care a whole bunch about your money. Do you understand that feeling?
I do. Yes. And I think I've even said that to clients before. It's really sad that I care more than you do.
Yeah. Get
Yeah.
yourself in here. Let's sit down. This is your money. You're the one who would have to answer the IRS. You're the one who would have to go get a loan or ask your mother-in-law for some extra cash. This is your baby, and I'm here to help. So I appreciate what you do. Tell me a little bit about your process as you start working with a client. How do you get them up to speed? Maybe they're as afraid of the financials as you are of taking that selfie every day.
And most of them are. So if they come in through my coaching programs, we have this nice little 6-week pre-recorded and then a live call with me to actually do the implementation piece of it and help them be brave enough to open up that QuickBooks file or whatever it might be and dig in there to their numbers. So I've tried to do this kind of baby steps to begin with. Once they get through that process, and we've got their profit first systems going, and we've got their transfers rolling, and their bank accounts are open, and they know what that truly fully burden cost is for their employees, then they are able to graduate to my other program, which is a longer term commitment. And that one we dig in deeper. And we are now looking for nitty gritty profit leaks and cash flow leaks, and we're into the KPIs and we're into the numbers. But they got to start somewhere. So we start them on the smaller program.
I love this. Let's talk. We talked a little bit before we got on the call. I wanted to dig into cash flow. So Jamel Smith, another great accountant, says that sales, you got to have sales, so because you got nothing to work with no sales. And then you got to have profit. Sales minus expenses, we have to, charge more than it costs and create some kind of profit. But profit's more important than sales. And then we got to have cash. So we can't have all of our cash stuck in accounts receivable or so much debt that we've incurred to get here that we can't afford the service of that debt. So cash flow now becomes more important than profit, which is more important than sales. So those 3 KPIs, sales, profit, and cash, those are the biggies for any business ever. How do you get the conversation going on cash flow with your clients?
We have this nice little program where we're able to pull numbers from their balance sheet and their P&L, feed it into this program, and they get to see green bars or red bars on this little graph that comes up for them. And we start working on the red bars, which is where cash is just leaking out of their business. And then we'll circle back around to the green ones, because some of those could use puffing up too. But we start with those red bars, try to keep it super basic for them. But there's a lot of work that can be done in areas such as accounts receivable, if they're not collecting at the time the job is done, or even their payables, if they're sitting on them too long or they're processing them too quickly in light of where their receivables are, or if they're carrying some inventory. Most of the time, our service businesses carry minimal inventory, but COVID puffed that inventory up because they had to buy it when they could. Now we're past COVID, but if they're carrying some inventory because maybe they got in the habit of carrying it during COVID, there's a use of your cash, and we might want to take a look in that area. There's always overhead expenses that can generally be cut. We want to go look in that cost of sales number. What are we paying for things? One of my coaching members came to me after we had a lesson on your costs and your cost of goods and stuff. And he came to me and he said, I buy from 3 different suppliers. He says, I did not realize, because he wasn't the one doing the books. He was running the job and his sister was doing the books. He says, I had no idea that supplier X or let's say supplier A charged me $50 for the part. Supplier B charged me $53 for the part, and supplier C charged me $70. He says, when I got into looking at it, we were buying all of our parts from supplier C. And he goes, I quickly had a conversation with supplier A and B, and they assured me that they could handle what we needed. And so they moved it over, and they were going to put several $100,000 back on their bottom line, just because he was out there running jobs and she was doing the books, and there was no correlation between the two of them.
So do you help clients put together a budget?
I do. Only we try not to use the 4-letter word of a budget. We call it a profit plan.
A profit plan. I love that. I was just going to say that too. Even as I say the word budget, it sounds like dieting, no fun, deprivation, blah. Yeah. So budget is just goal setting or profit planning. I like it. You don't want to set up a budget to be a loser. You want to set up a budget to make some money that then you can, you'll have profit. You can pay yourself, you can pay your bills down, you can pay your taxes. So you need to get that profit big enough to keep that cash flow going.
Right. So we like to build out profit plans instead of budgets. And in that way, we're constantly checking our profit plan. How are we working? How's it looking? Are we staying on track for our profit plan?
For our profit plan. I like it so much.
Yes.
So tell me about your experiences with Mike Michalowicz. I've met him before. I've read his books. I love him.
I would say Mike is a very dear friend of mine. I have been part of his group for 8-9 years now, something like that. So I'm one of his mastery level Profit First professionals. So we get to hang out with him live almost not quite 2 full weeks in the year, but a good chunk of 2 weeks, once in the spring, once in the fall. And then we're on calls with him a couple times a month for his mastery level. So you get a lot of the Mikeism stuff coming through, and you find yourself channeling Mike when you're in conversations. But he's an amazing
maybe explain a little, maybe your clients know, but just this podcast can go far and wide. Right. What is the basic concept of profit first?
So profit first basic concept says, let's throw away the accounting formula that says sales minus profits equals expenses. Let's throw that away.
Oh, no.
And let's rearrange it and say sales minus profits equal expenses. So we're going to plan the amount of profit that we want, and then we're going to structure everything around it so we can take that profit first, and then we run the business off of what's left. And consequently, we have much more successful, highly profitable businesses than those who are taking their profit last. If there is any, I'll take the crumbs. We're planning our profit up front.
I love this philosophy. At the beginning, that can be a little tough. There might not be anything at first. And I think that's fair. You can plan for profit and have some delayed gratification.
Right. And we'll start people out a lot of times at 1%. So let's pull 1% from your deposit every week and move it into a profit account. And usually we can do 1%. Sometimes we can't do more, but you know, at least it starts. We always say that profit is a muscle. And just like anything else, if I was to walk in the gym and walk over to the big old weight bench, I could not bench press what those buff guys could do, because it's a muscle. I'd have to start out at some scrawny looking little something or other that they'd laugh at me.
Yeah, get it. Okay.
You have to build it up. So if we start at 1% and then over time, we're able to increase it, but we also have to look at, does that business have a bunch of debt? Do we need to be paying down that debt? So sometimes this owner gets a tiny little piece of what's in the profit account to reward themselves, and the rest will go towards paying down that debt, because we've got to get that cash flow in a positive number for that company.
This is really what's obsessing me these days. And, you know, one of the things I learned as a as I grew in my career, I had the experience of working for a couple of really savvy business owners with Benjamin Franklin, the punctual plumber. This is 20 years ago, but I really was still quite new to all of this. These guys, the investors of this company, were very wealthy guys. And when they started their business, for them, the game was still bootstrapping. And bootstrapping is using the business to fund business funds to fund the growth of the business, that you don't count on a big cash infusion to grow a company. And another franchisee and I were having this conversation today, that very often businesses fail because they're undercapitalized. Maybe, but sometimes they fail because they burn through their capital before they learn the lessons of a bootstrapper.
Yes.
Does that make sense? Like, it takes a lot of discipline to carve out that 1%, to be obsessive about the numbers, to just watch every single penny that's coming into and out of the business. But those skills will serve you very well. So the guys that I worked with, although they were really wealthy, the game for them was bootstrapping. They like to start a business for next to nothing and see what they could do and how fast they could grow sales, profits, and cash.
In my program, we have this little tool, we call it our tool audit. And in there, we're not looking so much at physical tools, hammers and wrenches and stuff like that, but I'm looking at what are those recurring charges that are sitting there on their bank account or on their credit card account. And 9 times out of 10, when we get the books open and we start looking at that, somebody says, I have no idea what that charge is. Well, let's wonder how long that's been sitting in your QuickBooks. And it'll have been there 3, 4, 5, 6 years, silently bleeding profit out of that business. And so getting them so they feel comfortable enough to dig into those kinds of things. And then also taking a look at how they're spending money. Is it a want or is it a need? Is it needed to make sales come in? Or is it just a want because it makes it more comfortable? So we may have to get hard enough on a particular business to cut the wants out. And we only keep the needs until we get some cash flow. And then they can slowly start adding some of those things back in.
The tricky one there is that the largest expense is what, Diane?
Their accountant.
Nah.
That's one that they like to cut though. Actually, it's their payroll.
It's their payroll. I love that though. I'm going to start using it. Their largest expense is me. No, wait, not me. But is the people, and that's a little tricky, right? Because we don't want people to leave. We want to make sure people are being paid well. How do you manage cash flow in a business like ours and in the trades where people are that number one expense? Could be, in fact, a good percentage for us. Total payroll, just gross wages, is 35% of sales. 35% is good. That means 35 cents of every dollar you bring in goes right out to gross wages. That doesn't count payroll taxes or a pencil or a truck or a computer or a uniform or insurance or advertising or any of that. So that's a tricky one.
It is. And sometimes oftentimes we're able to take a look at those employees and we're able to spot inefficiencies, because I'm an outsider looking in. I'm not in your business every day, and we can find inefficiencies. And when we can plug those inefficiencies, that same tech can now take on 1 extra job a day or 2 extra jobs a week. And now we're start dropping that to your bottom line. Your payroll stays the same, but you're dropping that to your bottom line. That other 65 cents on that dollar is going to your bottom line, and you were still able to keep your people.
So what kind of efficiencies would you look for?
Well, I'll give you an example from another one of my coaching members.
Okay.
We have a husband-wife electrician team. He ran the crews. She worked from the home office and answered the phone and did all the paperwork, typical type situation that we see.
Yep.
He came down really sick with the flu one day. And she says, oh, honey, just stay here. I'll go get the guys rolling. And so she trucks on down to the shop and she gets these guys rolling. Well, she shows up 7 o'clock and they start, drifting in about 7:10, 7:15. She goes, and then I watched them. A couple of the guys had a big box of donuts under their arms. So they stood around and they had donuts and coffee. Well, they had all clocked in at 7:10 or 15 or whatever. They stood around and they ate donuts and they drank coffee. She goes, about 7:45, maybe 8 o'clock, they finally got on the road. She goes, I wasn't saying anything. I was just kind of watching. They finally got on the road and headed out for their first job. She goes, it wasn't too long that after they got on the road for their first job that the phone rings in the office, and she's back at the house by now. And one of the guys says, I'm missing such and such a part. I'm going to run down to the local parts store and pick it up. And by that time, she had talked to her husband, and she says, oh, no, you're not. I'll go do that for you. So she runs down to the parts store. She goes, I had to stand in line because there was about 15 or 20 guys from the other crews standing around eating popcorn, drinking coffee, and BSing with each other. She goes, I realized right then and there how many hours were leaking out that we weren't even aware of. And so by doing that, we were able to take a look at some of her jobs. And she ended up hiring just a part-time intern kind of person to be the parts grunt, pick up things, drop things off, and keep her main technicians on jobs. And they were able to add several jobs per week to their workflow just because of that small little efficiency, and then getting them on the road faster in the morning, not letting them sit around and drink coffee and eat donuts for half an hour.
It's interesting. What I look for are what's a small lever that you can push that will have a massive effect.
Mhm.
I'm a lazy person, essentially. You wouldn't know it to see me. I have a lot of energy, but I like to see how, what's going to be the most important thing to do to create sales, profits, cash, right? And what lever would I push compared to another? Because some people waste time on things that don't matter.
Right.
Would you agree?
Yep.
All right. So one of the things that is a small lever to push that will have a huge impact, in addition to what you just said, is just one, ride along. Watch it happen, be in the business, pay attention. And like you said, you're not passionately involved with this. As someone who wasn't there every day, the electrician's wife had a less passionate view about the whole thing. Like, wait a sec, no judgment on the guys, just like, wow, we could probably move better in the morning to get out the door. One of the things I found that has a huge impact on efficiency, or there's two reports we do at Zoom Drain. And one of them is that if they're using Service Titan properly, that at the end of every job they perform, there's a way to indicate what they used for materials. And our Service Titan is even set up that there's a default list. If that's what they actually use, they just are good to go. If they didn't use that, they can let it know. The idea is that you have a running total of stuff you took off that truck that day. That now could be turned into a PO, and your supply house can just in time replace your truck every day. Can do it every day, could do it every other day, but making sure that those trucks stay stocked is another reason why you're going to keep them out of the supply house.
You bet.
The second system we have that's just worth its weight in gold. Well, it's like a digital form, so I don't know if that's the best. You know what I mean? It's important. Is that they have to do a truck inspection before the truck leaves. Does the truck have fuel in it before they run out of gas 40 miles away? Are there any lights on? Are the tires full? Is the machine making a weird sound? The jet. So like if they just check the machine on the daily, in fact, the way it's set up, our dispatcher won't send a truck on a job unless they've submitted their truck inspection. Those two things have made a world of difference in terms of so much time saved.
Right. Because what business owners don't understand is you're paying for those minutes, and those minutes turn into hours. And when we go back to that labor burden calculator tool that I use, they're shocked at those unproductive hours. When you put that into a dollar amount, what that costs you as a business owner to have your employees being inefficient in some manner. And if you can plug those types of inefficiencies, that goes straight to your bottom line. You didn't have to take another job. You didn't have to work harder. You didn't have to buy another truck. You didn't have to hire another person. It went straight to your bottom line.
Oh, just goosebumps, girl.
I know. We're going to get these guys all fixed, aren't we?
Well, it isn't that hard. It's a matter of inches. I think sometimes too, people struggle with making simple changes because they'll have to be wrong for a very long time. they would have to have been wrong for a very long time. And I think it's harder to be wrong for some people than to be rich.
Right. Pride.
Okay. Would you rather be right or would you rather be rich? I think that's a Wayne Dyerism. Would you rather be kind? Would you rather be rich or would you rather be right? And so, being willing to let go of what you don't know without beating yourself up, without collapsing into regret or despair. So I wish I'd learned this 20 years ago. Well, you can learn it right now.
Right.
You can
We
learn it
all
right
say
now.
that.
Yeah.
I wish I would have known 20 years ago what I know today, but now I know it and let's do something with it.
When you know better, you can do better. I wish I'd worn more sunscreen 20 years ago, 30 years ago. I'll tell you that. But here we are. So it still all goes into the book and the story. I wonder sometimes too, if life were too simple, there wouldn't be any art created or any songs written.
Right.
There has to be a little bit of struggle in the whole bit. But I tell you, business does not have to be as hard as most people make it.
No.
Would you agree?
I agree. Yeah.
Yeah.
So Ellen, I have a burning question for you.
Oh, okay. I've been asking all the questions. I'm learning a lot today.
So my burning question for you, and it's one I've been asking at the end of every podcast episode, is what is the most unique profit leak that you have seen in the businesses that you've worked with?
I just went to one that's really common. But I'm going to save that and let me come up with a one that I hadn't seen before. Let me start with the one that's super common.
Okay, start with that one.
Okay, I'm going to start with that one. I don't know about the unique. I guess there's all sorts of goofy ways that people burn money without paying any attention to it. But I would say the most common one, and it comes to kooky family businesses, is paying a relative, usually a relative, sometimes it's someone who feels like family, who absolutely is terrible at their job, 100% terrible. Everyone knows it. And we continue to pay this person because they're so hopeless. And to me, and it happens with some frequency.
Yes, it does.
Well, it's Susie. And Susie, everybody at the shop knows Susie. I know Susie as I'm walking in the door is a complete loser. Right. And I have this belief that everybody has a way to win. And if Susie's not winning here, we need to let Susie go.
Yeah.
And so more than once in my career, I have suggested, how about if we pay Susie to stay home? Let's still pay her. You're going to pay her anyway, but you could work it because my mom would never forgive me if I let go of Susie, if I blah, blah, blah. But you know what often happens is that Susie moves on to find a place where she absolutely blossoms. And then the reality is that we've been holding that person back and putting them in a situation where they know they're losing absolutely every day. And that breaks my heart.
Well, thank you. I love that one. That's not one I had really heard before. I'm getting a
It's
nice
leak. I mean, it's a
here.
profit leak, but at some point, if
Yes.
Susie were to move on, we could then recover from that. But we are paying people at our company to put them in a position where they lose. And I think that is unethical. Because that person is not worth one bit less just because they don't work for you. There probably is a way that they can be really productive somewhere else if you would just not keep holding them back. And I think that it's easy for me to see it when they can't see it because, like you said, I'm coming from the outside. I'm less emotionally attached. It's often a family member or someone who feels like it. Mm-hmm. Now, maybe there's a kid or someone who, your dad's 93 years old and he feels really great coming in the door and helping out. That's not what I'm talking about here. That's fine. And there's a price tag that makes sense for your dad to come in and be the greeter at your lease line every day. But there's just that, the difference here is that putting someone in a position where they know and we know that they're failing is not okay.
Yeah, because that just makes life terrible for them and for you.
Mm-hmm.
And let them move to some place where they'll thrive.
Yeah.
And I've told that to employees over the years, you've tried really hard, but where we're not a good fit has nothing to do with you, has nothing to do with your skills. It just has to do with our work style or our business. We're not a good fit. So I'm going to let you move on to someplace where you can be a good fit.
Yeah.
And I hear from them later and going, thank you so much. Because it's like, they feel like I'm a failure. I've been fired. No, you've just been loosened that you can go and you can find a better fit.
Just as like a little add-on to that too, because sometimes the boss will say, I don't think I've done right by this person. I think I could do better. And that might be worth you addressing that. Okay, maybe I could do better. I could take a course. I could get better at leadership, listen to good mentors, take classes, get better. On the other hand, you'll be better later. Maybe you're not a good person for that. You're not a good boss to that person right now. And you can forgive yourself for that too.
Right.
Today is maybe not the best fit, and another day. What my mentor, Jim, my partner, once said to me that, there was a fellow who worked with him. And he always really liked him, but he left and he said, I was not the boss he needed at that time. Our company wasn't the company he needed at this time, but I bet he would really love it here now. That's just, he's gone and all of that,
right.
but
Yeah.
we change and grow too. So I really enjoy you. I love your podcast. I'm so excited to be a guest. Thank you very much, Diane.
Yeah, thank you so much for joining me today. And Ellen, if people want to find out more about your Zoom Drain franchise, or what's Ellen doing out there, or is she writing another book, how can they reach out to you?
Well, I'm waiting for my next book because I've got big plans at Zoom, and it will definitely be about the Zoom story. You better believe it. But zoomdrainfranchise.com is a great place to learn about our franchise and our franchisees. And I encourage you to check out Zoom Drain Franchise. We're drain and sewer experts, dirty jobs, absolutely love them. And then at ellenrohr.com, my name, ELLENROHR.com. That's where you'll find my books. I've got a couple on basic business literacy and a couple of business planning books. As I was figuring this out, my husband and I also had to ask big questions like, what are we doing this for? And why do we want to do this? And what are we doing? And how long are we going to do it? How much money do we want to make? Those are business planning questions. So that's what steered me into simple, thin business planning books to support all the good stuff that you've got on your shelf back there. I've learned a lot from you today, Diane.
Well, thank you. I'm so glad you did. And I'm going to say that is a wrap for this episode of the Profitable Home Services Podcast. Remember, it's not how much money you make, it's how much you keep. Because if we're not keeping our profits, we won't be in business for much longer. And while you're thinking about the podcast, I'm going to say, why don't you grab whoops, that is not working.
Pull it in there. There you go.
A free digital copy of my book, Your Path to Profits. And in here, I share 9 profit boosting tactics that will transform your service business. Head on over to yourpathtoprofitbooks.com and pick up your free copy. If you want a paperback copy, just reach out. I'm happy to send those to people, and I like to sign them and send them on out as well. But thank you again, Ellen. This has been amazing having you on the show. And when you get that next book ready, reach out. We'll get you back.
I will. Let me know when this shows up, and I can recommend some good guests for your show who would love to be on with you.
Great. Thank you so much. And thanks, everybody. We'll catch you on the next episode.